Hello, Bisons. Welcome to Bisora. Today, I'm going to be introducing you guys to a very simple strategy I've been developing over the past couple of years. I've had success with it, and I wanted to share it with you guys. I know that there is a lot of confusion in the trading space, especially with analyzing and understanding the markets. So I feel like this is a very simple system, a very simple strategy that a lot of you guys can adapt. And like I said, I've had success with it. So I feel like if it can help you guys, then that is all I want. I just want to share with you. And yeah, so before we get started, there are a few things that I want you guys to understand. First of all, this applies to all market conditions, to all markets. I don't want to say all market conditions, but most market conditions, you will find success with this strategy. In all markets, you will find success with this strategy. It doesn't matter if it's like Forex, if it's commodities, if you guys are trading indices. I've traded literally everything with this, and it has not failed me. So one of the first things that I want you guys to understand is, as traders, what is it that we are trying to accomplish, right? Like what is the goal? What do we want to achieve, right? Now, in order to engage with the market in any way, we have to have some form of identifying what is going on, right? Like we have to, when we do our analysis, when we look at our charts, when we do our technical analysis, what we're doing essentially is very similar to picking up a book and reading the pages of the book, right? To understand what the story is about in the book, what are they talking about. The candlesticks paint, these are literally words, and once you learn the language, it is literally, like I said, reading a book. And you read the book to understand the narrative of the market, what is happening in the markets, what is it trying to do, what is the story that it is telling us. It is all here on the charts for you guys to see. And once you guys understand how to look at the markets properly, then I feel like that will help you guys a lot. So without any further ado, let's get started. Let's get right into it. And like I said, if we are looking for things that we can identify, that implies that these things have to repeat themselves, right? In order for us to be able to identify it, it has to be occurring often enough for us to see these things happen. Now, the most repetitive thing in a day is the time itself. Each day is just a loop of the same 24 hours happening again and again and again, right? Now, with that understanding, when we approach the markets, we can look at similar time of day, day of week, week of month, whatever. We can look at the similar times, and we can analyze, and we can look for patterns, like I said, that repeat themselves, things that we can use to engage in the markets, right? So we want to understand that with what I'm about to show you guys, time is the first and most important element, okay? Time is the first and most important element of what I'm about to show you guys. Well, we're going to keep the current moment on the chart, so I'm just going to adjust the zoom just a little bit here for you guys so you can see more clearly. I'm just gonna go to here like this. Perfect. Now, the second thing that I want to talk to you guys about is a very simple pattern that we're going to be looking for in the market. And it is also one of these things that repeat over and over again, many times actually in a 24-hour cycle in a day. You will be able to see this pattern. You will be able to see this on all time frames. I'm gonna highlight it here on a 2 hour time frame. We're gonna be using this especially on a higher time frames to choose our levels to engage with the market, and we're gonna be using it in conjunction with the lower time frames for entries also. Okay, so I want to show you guys what the pattern looks like, just a really crude depiction of it here so you guys can have a basic understanding. um, this is going to be one example of what it might look like, and we have different variations of this. We have a bullish variations and we have the bearish variations, and these examples that I'm showing you right here are is what we're going to identify as the bearish variations of these. So we're looking for these to form at the top of a swing, at the top of a range, approaching highs. We're expecting to find these patterns in those areas, okay? And vice versa. If, let me just undo, if we were to invert these images and look at it from the opposite side, it would then have the bullish variation of these patterns, and we would be looking to find them at the lower end of the range. We'll be looking to find them approaching the lows at or below the lows, and I'll show you guys what I mean when I start picking out some examples for you guys. And actually, let me go ahead and I'm just gonna cycle through this, and I'm gonna look for some examples for you guys to see so you can have a much better understanding of what I'm talking about. So I'm going to start by picking you out some examples of the bullish variation of the pendulum. And we use the pendulum to find the pivot, you guys, okay? That is what this pattern is for. We use it to find a pivot. And by definition, we know that a pivot is essentially a turning point, okay? So we're using the pendulum to find the pivot, okay? I want you guys to understand that. You guys should be taking notes. Make sure you have your notebook. If you are here to learn, then you should be taking notes. And I'm just gonna keep going, looking for some examples, and then I'm gonna come back to them and go over them in some more details. But for now, let me just go through and pick you out some examples. Actually, no, that is the wrong point. Excuse me. From here to here to here to here. So I have selected right here 3 examples of what the pendulum looks like in a bullish variation, and I'm gonna just go over each one of these in a little bit of detail so you guys can understand the concept, and then we're gonna continue and I'll find you guys some examples of what it looks like in the bearish variation on this pattern, okay? Now, I mentioned to you guys that the pendulum is a 4.3 move pattern. All right, so we have point number 1, point number 2, point number 3, and point number 4, and we have 3 moves between these 4 points. What we need is for the second point to be broken, and because this is in the bullish variation, the second point is going to be broken to the upside, you guys. So we're going to go ahead and highlight the first candle that closes above the second point on our pendulum, and that is going to be our pivot. And by definition, a pivot is simply where the market is expected to turn. We're looking for a turning point that we can put some trust in it. There is a reason why we choose these levels. There is and you guys can go through your charts. You guys don't just believe me, don't just look at me do it on my chart. You guys have to go do your own analysis, bring it up, go through your own charts. When I show you these examples, you have to go look into your charts and find these things on your own. That is when you will build up your trust to know that these things work, okay? Now, having selected this candle right here as my pivot, I want to explain to you guys in just a little bit of detail what that means, okay? Like I said, a pivot by definition is just a turning point in the market. So we're expecting a turn at or around this price level right here. We don't know for sure if it's going to turn and go to the upside and trend upwards. We don't know if it's going to turn and go downwards in a bearish move. We don't try to know. We don't need to know beforehand, okay? The market will show us what it's going to do. So essentially what we are trying to do is not so much trying to predict what is going to happen. We're not trying to guess what is going to happen either. All we're doing is waiting for the market to show us what it wants to do, and then we can engage. Then we can use these levels to get into the market, and we just want to get in and get out at a part of the move where we can extract profits. Okay, we're just here to be profitable. We are not here to be perfect. Okay, so we have the market returning to our pivot point right here for the retest, and this is our first touch. Another important concept that I'm going to introduce you guys to are what we call one touch levels, and it's all connected together, you guys. We use the pendulum to find the pivot, and we want to know if our pivot is going to be a one touch level. Okay, so it's very simple. It's like Lego pieces. They build on top of each other. These are not different things, and you have to guess which one is which one and which one to use or whatever. No, you guys, we're not trying to confuse ourselves. We have one simple system, one simple strategy. It has a few components to it, not too much, because like I said, we want to keep things as simple as we can. So with the market return into our level right here, we're going to classify this as our first touch on our level, not when it is formed, okay? The formation is not classified as the first touch. What we want to see the price move away from these levels and return to them for one touch, really. That is why we will be labeling them as one touch levels. And that touch can be when the market comes. We want to see it happen like this. In this example, actually, we want the market to move away immediately thereafter. After returning to our level, we want the market to move away immediately. We don't want it lingering there, slowing down or whatever, building up liquidity at our levels, around our levels. We don't want that happening. Okay, we want repulsive levels to choose for our pivot points. Now, I'm going to apply the same principle to the next example. We're going to wait for the second point on our pendulum to be broken, and we want the first candle that does that. And as we can clearly see, that is going to be this candle right here. This up thrust closed above our second point on our pendulum. And we're just going to draw that out, same like the first one, to the first interaction. Actually, we have the first interaction right here. And this is going to be actually a perfect example of what I mean when I say the market should move away from your level, return to it for one touch, and it should be repulsive. You should have a fast move away when the market does that. And as you can see in this example right here, we have that happening where we have the pendulum form first and foremost. We wait, we get our pivot form. It is the first candle that closes above point number 2. In this case, it's going to be above because this is a bullish variation. If we were to look at this in a bearish variation, the pivot would be closing below the point number 2 on the pendulum, okay? And you guys should be making a note of this, and you guys should not be getting the terms confused because it's really, really simple, you guys, okay? Now we get our pivot right here, the first candle that closes above point number 2. We draw that out a little bit in time, and we can see we did not have to wait too long for this level to give us the opportunity to get into the market and extract some profits. Okay, now I'm going to continue on to our third and final example of the bullish variation on the pendulum, and I'm going to highlight the candle that is our pivot. Now remember, you guys, this is also a good example and a good time to point out to you guys that when we are selecting the pivot, we have to make sure that the candle that we choose for the pivot, it has to open below the high of the candle at the high on point number 2. Okay, let me say that again for you guys. Whenever we select the pivot, we want it to close above the high at point number 2 on the pendulum. However, the open must be below the high. Okay, so it has to open below the high on the candle on point number 2, and it has to close above the high. And I can show you guys, they say a picture is worth 1,000 words. So to simplify that for you guys, I'm going to point out why I am mentioning that, and it is because of this example right here. If we can zoom in a little bit more on these candles, I want you guys to see that this candle right here, it opens just below the high on the candle that will be at point number 2. This high right here is going to be point number 2 on our pendulum, and we are waiting for this high to break. And by break, I mean we need the candle to close above this high right here, and the candle that does that is going to be this one. Now, it is very important that the open is below the high and the close is above the high. Okay, as you guys can see here, this one is closing just below the high right here, and this one is opening also just below the high. If there was a gap, if there was a gap, for example, sometimes what you will see when the candle when it opens this close to the high, there is a slight gap and it opens above. We will not be able to use this candle. We would, by itself as a standalone, we would end up having to do something like merging these two candles together, for example, because we need the candle to open below the second point on the pendulum. I hope that makes sense for you guys. There is going to be an example of it, I'm pretty sure, in the future if you guys are watching the videos. Continuing, we can see it's the same concept that we're using to choose the pivot point. We just want to get the second point on the pendulum broken, you guys. And by broken, I mean close. I need the candle to close above the high right here. We have what is called a breach, and we have what is called a break. A breach is going to be when the market trades above the level here, but it fails to close above the high, like we can see on this candle here. And the next one, we have the actual break because it closes above the candle right here. If that is not clear to you guys can watch on repeat, listen to it again, and if it's still not clear, then you guys can just continue. There will be more examples to make it more clear for you guys. I know sometimes it's easier to see than some, and it is going to come from your own practice, you guys. That is going to be so important in your understanding. You have to go into your own charts and you have to look for these things that I'm showing you. Okay, you're not just going to get a good understanding of it by listening to me talk and by watching these videos. Yes, that is how you learn, but you also learn from your own experience, from your own practice, and from your own studies, you guys. I hope that is clear enough for you guys, how we choose how to identify the pattern, the pendulum, how to use the pendulum to choose the pivot point, and what we are using the pivot points for. Now I'm going to use this same fractal, you guys. I'm going to go ahead and remove all these annotations. I'm going to remove all of these, and I'm going to use this same fractal. We just had the bullish variation on of the pendulum, so I'm going to use this same fractal, this same price, this same time frame, and I'm going to get the bearish variation for you guys. I'm going to show you that it is not about being right or wrong. It is about your perspective. A lot of times how you look at the market, you can use different lenses, you can use different perspectives to get to the same point. It does not matter how you get there, as long as you guys are making profits. That is the only thing that matters at the end of the day, is just profitability and consistency that matters. So I'm gonna go ahead and look for some examples of what would be the bearish variation of the pendulum, so I can show you guys how that works also, and show you guys how to use that as well, just like you did with the examples at the beginning of the video, you guys. Now we have another one right here. I'm going to try to find the same amount. We had what, like 3 examples in the last one. There are 2 forming here that we can choose from, and this is actually a rather interesting level, if I can do this properly. Because some of you guys might look at this level and you might choose this as the pendulum, but there is also another one that is quite similar in there, and we can use this as the pendulum. And this is actually also a moment that I want to take to highlight to you guys that even though we are so precise with our trading and we are so technical when we do our analysis, there is also a artistic side, an artistic element to your trading, because it is inspired, you guys. Your trading, it comes from, like, it's innate, it's within us to become traders, you know. So there is a certain element that is artistic in our trading, and this is an example of that. I like to see these things play out this way, just different patterns, different or the same pattern play out in different ways, and it's just amazing to see, you guys, how the markets can form these abstract patterns, and it's just a matter of you having the eyes to see them. Now, having these 2 levels right here, we can choose different pivot points. I'm gonna delete one because we don't want it to be confusing. So we can choose either one of these levels. It doesn't really matter. I'm just gonna choose, actually, I shouldn't say it does not matter. I'm going to give you guys good advice, and I'm going to use the most recent level. Okay, that is going to be the most important one. If I have to choose between 2 levels, I am going to choose the most recent one. I feel like that one, and especially also because this one has a higher volume in the candle. This one has more volume in the candle. So I'm going to choose this one for those 2 reasons. I feel like if I have to assign any importance to one over the other, those would be good points to base that selection on. Okay, this one is more recent, and this one has a little bit more volume in the candle, so it's more pronounced. And yeah, I feel like that's a good reason to choose this one over the other one, so I'm gonna do that. I'm actually getting ahead of myself because I am using the most recent example before this one, but let me just make sure that I have the same amount of examples. I want to find one more for you guys, and I see one right here, so I'm just gonna, there are also different ones in this area also. This is not the only one, but I don't want to spend too much time picking out examples. You guys should get the general idea of how to do this by now. This is going to be 6 examples for you guys. So, and I'm going to be showing you guys myriad of examples going forward. This is just to introduce the concept to you guys so you guys know how to identify this pattern going forward. Okay. Now we're going to go back to our first example here, and we're going to do the same thing like at the beginning of the video. We identify the pendulum. That is step number 1. Okay. Step number 2 is to wait for the pivot to form, and the pivot is going to be the first candle that breaks point number 2. Now in our previous examples, the point number 2 was being broken to the upside because we were looking at the bullish variation for the pendulum, so we were getting the break to the upside on the point number 2. In this instance, we are looking at bearish variations, so we are going to have the point number 2 being broken, to the downside, you guys. Now I'm gonna go ahead and highlight the pivot right here, and not much more needs to be said. You guys can clearly see I mentioned to you guys what the 1 touch level was, how we want the market to move away from these levels, return to it for 1 touch. As we can see, we have that happening here, and the market was repelled from our level and it traded downwards, and we had a liquidity run on these swing lows right here. This is also a pivot point, you guys. This was actually the point that we used for our first example, if I'm not mistaken. So if you guys were using this point to engage, you guys can clearly see that our levels, we use them to enter and exit into the market. And you can see this one, if you guys go back to the beginning of the video, you will see that this level right here was a part of one of the examples that we used. So we're just going to move on to the second example. We already selected the pivot. I already have it highlighted right here, and as you guys can see, this one we do have a reverse, and this is going to be actually the perfect example to highlight to you guys another layer to the pivots. So whenever we choose our pivot, and we identify it as being the first candle that breaks at point number 2 on our pendulum. Correct? Correct. Good. Now we can transfer the pivot. We can transfer it as many times as we want to. However, I will generally transfer the pivot, I would say, up to 3 times. And that comes from a principle that I adopted from chess, you guys. And in chess, we have a saying that we say, whenever you have a move, try to find a better one. Whenever you look at your charts and you see a move, just try to use that move and keep it in mind, but have that in the back, but look for a better move. You know, just spend a little extra time to find something that might be better for you. Okay, and that principle, we're going to apply that to our trading right here. We have a pivot right here, and we are going to just add a little bit of an extra step to it, and we're going to see if we can use this one to find just a better level to get into the market. right? We have the benefit of hindsight, you guys. This already happened when we are analyzing the markets. We have the benefit of hindsight. We have the information present to us, so we have to use that to our advantage, okay? We have the information, we have to use the information to our advantage, you guys. Now, what I mean when I say the pivot can be transferred is really simple, and I'm going to show you what I mean. So when the pivot forms, we already understand that we want the market to move away from it slightly, return to it, prove to us that this is going to be a one-touch level, because we want the market to touch our level once, and then we want repulsion, right? Right. Now, after the move away from our level, we now place our trust in our pivot to hold, because it already turned, they already moved away. The direction that it moves in, we are anticipating that that is the direction that it's going to turn towards, and that's where it's going to move to. Okay, so when it returns to our level, we are expecting just a little tap, just a little one touch. Sometimes, you guys, you will find that it does not come back to our level at all. Sometimes you will find that you will have a little bit of a retracement, but it does not go back all the way. And that is why I say we are entering at or around these levels. If we are waiting for the market to come back to it literally every time, sometimes we're going to be missing out on a few moves, and that is going to be okay. Don't feel like there's nothing wrong with that. That is okay. And I'm going to show you what I mean when I say we're going to be transferring the pivot. And as I said, whenever the market moves away and it returns to our level, we have placed our trust in this level that it is going to hold. Whenever we have our pivot selected, we have placed our trust in these levels that they are going to hold, that when the market returns to it, we are entering the market, we are entering these trades at these levels, right? So how the pivot transfers, if a candle closes in the opposite direction, you guys, the market, if the candle closes, in the opposite direction that the pivot was formed. So in this instance, we are using the bearish variation on the pendulum. So we have the second point being broken to the downside. Now, in order for the pivot to transfer, we have to wait for a move away from the market from the pivot, in any direction, okay? We don't choose just because we're using a bearish variation of the pendulum and we have the pivot close into the downside. That does not mean that we are looking for bearish movement or short entries, okay? That is not what that means, you guys. It can go literally any direction using the bearish variation from the pendulum. It does not matter, okay? I want you guys to have that very clear, that just because we are using a bullish variation or a bearish variation for the pendulum to find a pivot, that does not mean that that is the trade that we're looking for. Bearish variation does not mean bearish market movement or bearish entries, okay? That is not what that means, you guys. Have that very, very clear in your head, in your mind, in your books. That should be very clear to you guys, okay? Now, whenever the market moved away from our pivot point, it moves in any direction. Doesn't matter. Move to the upside or move to the downside. All we want is a move away, okay? Now, when the market is returning to our level, that is where we are looking to enter, okay? We have that understood. Good. Now, the fact that we have placed our trust in our pivot point means we are not expecting it to break again to the opposite side, okay? Once it moved away. So we have it happening here. For example, we have the market moving away to the upside. Here, there are no candle closes, so we have to use this one. We have the market moving away to the downside here. When the market returns here, we are going short. We are looking for a short entry here, and we are going to be using our lower time frames in conjunction with our higher time frames to pick levels to enter into the market and to pick levels to also exit and get out of the market, you guys. So whenever we are looking to enter here, we are not expecting this level to be broken. Even if it is breached, even if the market trades above it slightly, we are not expecting it to trade below it, above it, all the way and close above. In the event that that does happen, you guys, that is where the transfer of the pivot comes in, because it is going to be the first candle that closes in the opposite direction to the way that our pivot was formed. Okay, it is a little bit more advanced as a concept. I'm going to make a separate video on that for you guys, but I'm just going to give you guys a example of it here just because it presented itself and I want you guys to understand what I'm talking about. I'm gonna make a separate video for you guys explaining it more clearly, but I'm gonna give you guys just an example of it right here. Okay, now like I said, when we have a move away from our level, when the market is returning to it, we have placed our trust in our level to hold. So in the event that the market breaks our level, the first candle that breaks our pivot, we are going to highlight that and we're going to transfer our pivot now to that candle. Okay, so now we update our level. We used our level to get an updated level. It's not necessarily, I don't want to say like it's a better level inherent, like in and of itself. It's not like a better level just by itself like that, but it's just an updated level, even though in this example it will turn out to be just clearly better for us to have chosen this level. It's not always like that, you guys, so I don't want you guys to see it work out like one time in a just perfect situation and feel like it is like that all the time. We do not want to set ourselves up for any disappointment, you guys, so we have to manage our expectations. Okay, it is very important that we are managing our expectations, you guys. Now we transfer the pivot to this candle right here from this one because it closed, it is the first candle that closed above the high. Okay, this is the high right here on our pivot. Even though we are highlighting the body of the candle, we are still referencing the entire candle. Okay, we are using the bodies for our pivot points, our reference points, but we are not discounting the wicks at all. We are still using them because we are paying attention to the highs and lows of the candle. So clearly we are using the wicks also. Now we use the pivot in the same way. Even though we transferred it from another candle, we did not identify this pivot from the pendulum, even though we can, because this is a pendulum right here in and of itself, you guys. If you guys are paying attention, you will see that that is the pendulum also. This is a bullish variation of the pendulum, and we have the same candle right here as the pivot on that, but we don't need the pendulum to find this one because we were able to identify it just from being observant and seeing that it transfers to this candle right here. And we can see we have a slight move away here. Our return to it should give us the indication to get long, get into our trade here. And like I said, we are going to be using lower time frames also to confirm these moves for us before we get into them, and we would have been in some form of profit right here on this move. If we're using a lower time frame, we would also be knowing if we need to exit out of these trades before or when we need to get out, if we need to get out. The lower time frame helps us a lot with entry and exit. The higher time frames are used to choose our key levels to trade from. And if I draw this out, you guys, just a little bit more into the future just for a little bit more interaction. We actually have another example before this one, but I want to just highlight, just use this one a little bit further. Again, we use hindsight to our advantage, you guys. We have this information already present to us whenever we are doing, like for example, now we don't have anything more to the right of the chart, you guys, so that is all going to be speculative. We are using these levels as we have them presented to us. So anything to the right of the current moment is going to be speculative. It's going to be random. It's going to be so many possibilities that can possibly happen. Like, it's crazy to think that you are going to know what is going to happen, you guys. Like, there is no way. Now, that does not mean that we don't know how to engage with the market. As you can clearly see, I've been showing you guys how to get into these trades, how to engage with the market using these levels. Okay, and I wanted to use this example just a little bit more because, like I said, we have the benefit of hindsight. We have this information already present to us on our charts, and it's the same thing that we have happen. We have the move away from our level right here, and on our return to it, we want the first touch to be very repulsive. We want the market to move away from those levels rather quickly. We don't want the market slowing down at these levels at all, and that is what we have happening here, as you guys can see. The lower time frames, whenever we get down to, I know I keep saying the lower time frames, whenever we get down to the lower time frames, you guys will be able to see also how we use these levels to get into these trades, how we use these levels to engage with the market, you guys. Now, moving on to our third and final example in this lecture, we're doing the same thing, and I wanted to use this one, you guys, because this one is a little bit more pronounced as the pivot. As you can see, I explained to you guys before that we use the pivot to define our risk parameters for our trades. This is going to tell us how risky each trade that we are taking is, and as you can see from this one, it is relative to what we've been seeing so far. This one is quite significant. Now, this does not inherently, this is not a good or a bad thing in and of itself. Okay, what that means is this, it's just you guys have to be able to manage your position sizes when you get into the market. Your risk management is going to be what saves you. It's going to be what separates you and what puts you into like the category of being a consistently profitable trader. Okay, you have to be, before you're a trader, you are a risk manager. Okay, you have to identify yourself as a professional risk manager before you can identify as a professional trader. Okay, you cannot be a professional trader without having the ability to manage risk in order to identify risk associated with the trades that you're taking and just being sensible. Okay, this is very serious business that we're doing here, so you guys have to take this seriously, and you guys have to really be careful. Like I said, manage your risk properly, you guys, and there is no way that you can fail with this. If you guys are still having trouble using these concepts, let me know in the comments. Message me on Discord. I'm on Telegram, you guys. Besora FX, that's on the channel. Leave your questions in the comments. Send me your charts on Discord. Send me your charts on Telegram. I am here to help you guys in any way that I can. Okay, now I'm going to use, we already highlighted our final example, and we can see that the market, like I said, it repelled from our level right here. And for this pivot point right here, this was the pendulum. I don't know if you guys can see it as clearly as I can. I already have my 10,000 hours, you guys. So that is very important. Remember, I tell you guys need 10,000 hours in order to become a master at this. So for those of you who are just getting started, you guys should not be sleeping. You guys should not be eating. You should not be doing anything else but looking at your charts. You should be studying your charts. You should be accumulating hours and getting your reps in. Think about this, you guys. LeBron James is going to be practicing his free throws today, and he's going to be practicing how to dribble the basketball today, you guys. LeBron James has been playing basketball for longer than some of us have been alive. He knows how to shoot a free throw, but he still goes to the gym and he practices his free throw. Cristiano Ronaldo, Lionel Messi, all these great athletes, as accomplished as they are, they still practice on a daily basis, you guys. Okay? So who are we not to practice? We are not nearly as successful in our field as they are in their field, you guys. These guys have won every championship that they can compete for, and these guys still practice daily. Okay? So who are we not to practice, you guys? Every day we should be showing up. We should be studying. We should be journaling. We should be outworking the competition, you guys. Okay? We want it more than them, so we have to work harder than them to get it, you guys. Okay? So with that being said, I don't want to make these videos too long. You guys should end the video right now, and you guys should go into your charts and you guys should look for your own examples of these things, and you guys should be engaging in Discord. Send your examples to Telegram, send your examples to the Discord, comment on YouTube. Make sure you guys are liking the videos, make sure you guys are hitting that subscribe, make sure you guys are sending it to the group chat, recommend your friends, because everybody should be finding success with this, you guys. We don't want to gatekeep on the strategy. We want everybody to be rich and successful, and that is why we are here sharing these concepts with you guys for free. So you guys should be taking advantage of this. Like I said, you guys should be going to your charts and looking for your own examples. And if you guys need any further assistance, I am here to help you guys. I am not hard to get in touch with. You guys have my email. You guys have my Discord. I am on X. You guys have Telegram. You guys have myriad of ways to get in touch with me. So there should be no excuses. Everybody should be finding success with this. And with that being said, I'm gonna go ahead and bring this video to an end. Thank you guys for watching. Thank you for your patience. Now go to your own charts and find these